What's up, guys? So the last investing video got a decent amount of views, so I wanted to make another one. So today we have 5 stocks that you should be buying right now. So stock number 1 is Nike. Nike has been on a big downfall over the last few years. I believe that it is negative over the last 5 years. And if you go and look at the chart, you might be a little bit pushed away from Nike. But Nike is a great company. They have a great brand. Their brand means something. I heard in a podcast from the founder of Whoop, the wearable like fitness tracker and everything, I heard him saying that he wanted to create a brand that not modeled Nike, but gave people the same feeling as Nike, because he said that the person wearing a Nike shirt and the person wearing a plain black shirt feels different. When you have that Nike logo on, you feel something. You feel like an athlete. Their slogan is just do it. Just go out there and do it. Like, everything about Nike embodies an athlete, a person who wants more, a person who is successful. They have a great brand. They have a great message, and the stock has been falling. And the company has been struggling, but Elliott Hill is the CEO now. He's back in charge, and he is going to make this company great again, and he is going to make them flourish. I promise you. It's going to be a long road, but Nike is going to go up in the future. I don't really know all the metrics off the top of my head, but most of them are pretty sound. And Nike just reported earnings a couple of weeks ago, and they beat on EPS and on revenue. So it is a great company to invest in. And like I said, it's going to be a long ride. Like, it's going to be bumpy, but there's no way that this stock stays below $100 a share for too long. I started buying Nike when it was at $100 per share. I've bought more as it's fallen, and then I bought a good amount down when it was near 60, 65. And now it's at like $56 a share. Personally, I believe that it is a great deal, and do not be scared that it is down. I know it doesn't look great, but I promise you, in the long run, Nike will be a great company. If you invest your money now into Nike and you just hold it for the next 5 years or so, if you have that amount of time, do it. Because if you can put that money in there and just let it sit, it is going to grow. Just don't worry about the day-to-day. Look at the long term, zoom out, and look at Nike as a whole. It's a great company, and it's not going to stay down forever. It's so many athletes wear Nike. Nike is the provider of so much apparel that professionals and amateur athletes wear. People of all ages wear and love Nike products. So that stock will come back. So there's number 1. Number 2 is Hims. Hims is a phenomenal company. To be honest, I'm not big into like health and healthcare companies, but I think that Hims is very good. They're honestly capitalizing on the Ozempic movement, which is not something that I endorse at all, but a lot of people are moving into that direction. So if Hims is going to provide that type of stuff, and then they also provide a lot of female and men's healthcare types of things, like they provide a lot of stuff for like ED and a lot of pills for guys, whatever, like stuff that people need, and they can get it all online. So they don't have to worry about going to a doctor, getting an awkward prescription and all that. They can just do it from the comfort of their own home. So Hims is great. It's great. It's easy. I mean, I haven't used it, but from what I hear, it's pretty easy to use, and it's very easy to access because you can just go online, search it. They probably even have an app. I'm not sure if they do, but you can just go online, easily search for it, and get exactly what you need and get it fast. And they're a subscription-based platform, so people are paying every single month for Hims products. It's awesome. It's great. They have almost no debt. The market cap is only $6 billion. The company has so much potential. They have so much room to grow. It's a great growth stock. Yes, it is a risk, but I think that it will pay off in the future. That's another one that I'm investing in, and I'm not touching it for 5 years, 10 years. I'm letting that thing grow, and I know it's going to grow. All right, stock number 3, PayPal. PayPal is another one that is down a lot, but I love PayPal. PayPal owns Venmo. I use Venmo with my friends all the time. My friends use Venmo with me and our other friends all the time. Venmo is great. It's so easy to use. A lot of people don't carry cash nowadays, and Venmo is a great way to is a great alternative to cash when you're splitting bills, splitting whatever. Venmo is great. My friends and I always use it. It's a great platform, and PayPal gets a little piece of that every single time that you make a transaction. And It's PayPal is a great company. That's another one that's down a lot. If you look at the charts, you might be a little bit scared away. That stock was up towards, I think, $330, $350, and now it's all the way down to 60, 67-ish. I think it's in between 60 and 70. I started buying PayPal when it was at like $75 a share. And then I bought more. I think it hit 50. It was in the 50s at one point. I bought more, and now it's been fluctuating in the $60, $65 price range, and I've just been buying more every so often. I think that PayPal is a great company. There definitely is a lot of competition with Apple Pay and Google Pay and some of the other platforms, but PayPal is safe and people trust it, and people who use it really like it. I believe that PayPal has over 30%. I think it's 34 or 35% of the online pay market share. So like if you're not using a credit card, if people aren't using a credit card, they are choosing PayPal 30 to 35% of the time. They are choosing that over Apple Pay, Google Pay, or some of the others. So I think that PayPal has a very good market share. Yes, it's a very competitive industry, a very competitive base. However, PayPal still reigns as the dominant force there, and I think that they're going to have a lot of success in the future. So that stock is down below $70, guys. It's literally, that is a steal deal. You cannot ignore PayPal. All right, stock number 4, Celsius. Celsius is down from its highs, but I like Celsius a lot. Here's the thing. Celsius caters to both males and females. With Red Bull and Monster and Reign and Bang and some of these other energy drinks, personally, I don't see too many girls my age drinking those drinks. Occasionally, not occasionally, you do see both genders drinking Red Bulls and Monsters, but I see more girls drinking Celsius, and Celsius just bought Alani. Alani is catered more towards a female audience, and to be honest, after Celsius bought Alani, I've bought a couple of Alani energy drinks. They're amazing. I honestly really, really like them. There was one flavor I didn't like too much. I think it was the Cosmic Stardust. It was like an orange creamsicle, which is honestly a flavor that I would like, but I didn't love it. But aside from that, I really like Alani's products, and I believe that they have energy bars and protein bars as well, which I haven't tried, but I would imagine that they're pretty good. They also have a powder, like pre-workout basically, but it's just their drink in powder form. So that's pretty cool because you can buy that, mix that in with water, save some money too, because you're getting a lot more servings at a discounted price basically. So that's really good. And Celsius as a whole, they have really good drinks for the most part. I like all of the drinks. I like most of the flavors. And Celsius and Alani both have no added sugars. There's no sugar at all. Most of them are between 0 and 10 calories. I don't even know how many Celsius drinks actually have 10 calories. Most of them are 0 calories. I'm not going to go out and say that's the healthiest thing for you, but you know what? Drinking an energy drink that has no calories and no sugar is way better than getting a Monster or a Red Bull with 40 grams of sugar and 150 to 250 calories. And Celsius also just got, I have one right here. They made the bigger Celsius drinks that have 270 milligrams of caffeine compared to their normal size drinks that have 200 milligrams of caffeine. So that's great. That's just an added product that people are going to buy. And Celsius also has a low market cap, $9 billion market cap, and I believe it's $9.3 billion market cap and about a 9.2 enterprise value, which means that they essentially have no debt. They only have $100 million in debt, which I know that sounds like a ton of money, but for a company that's worth $9 billion, that is not a lot of debt at all. So they manage their money well. They have a high return on invested capital. This is something I haven't even gotten into yet. One of the metrics that I love and that Warren Buffett has said that he loves is companies with high returns on invested capital. A high return on invested capital means that company is allocating their money in the right way and they're getting a high return on their capital, whether it's invested in the actual market, invested in the company, invested in other companies. They're getting a high return on their cash, on their assets, and that is awesome. Throughout the history of the stock market, companies with a high return on invested capital, high ROIC, have outperform the market. I can't give you an exact statistic on that, but I know that it is true. And you could fact check me if you want, but I know that I'm right. So I look for companies with high ROICs. Hims has a high ROIC. Nike has a high ROIC. PayPal has a decently high ROIC. A high ROIC is anything over 10%. So it's a return on invested capital of more than 10%. And Celsius has a 21% or 23%. It depends on who you look at. But they have a 21 to a 23% return on invested capital, which is phenomenal. It's amazing, especially for a company that isn't too big and is in its growth stages. So they have pretty much no debt. They have a great CEO. They have no debt, a great CEO, and a high return on invested capital and a low market cap. It is an amazing growth company who just had a pretty big acquisition, and Celsius is a healthy alternative to a lot of the energy drinks that we see presented and advertised to us. So I love Celsius. I think that it has a ton of potential. Stock number 5 is Google. This is a company that is much bigger than the ones that I have just talked about, but Google is a great company and they are down a little bit. They're down to about $150 to $160 per share. Google is a great company. They've fallen a little bit, but they have a lot of potential. Google, which is Alphabet. So Alphabet is the company. Their subsidiaries are Google and YouTube. Pretty big subsidiaries, I know. But Alphabet is the company, and Alphabet owns Google and YouTube. Google and YouTube are the two biggest search engines in the world. They dominate the search engine market share. Google and YouTube are not going anywhere. If Google and YouTube collapse, then the world is probably in a very bad place. So that is why I'm faithful investing in Google, investing in Alphabet, and holding it for the long term, because it's going to be around forever. It's something that we all use. We literally say Google it. We don't say, oh, go do a web search for it, go do an internet search for it. People of all ages say Google it. That is insane. We're literally using the product name to describe the action, which is pretty crazy. There are not too many companies that have built that type of a brand, that type of a moat. Google is a powerful company. They are a large company, so growth is not going to be as insane as some of these smaller companies, but you can rely on Google to give you 10 to 20% returns over the next 10, 20, 30, 40 years. Google is a great company, great management team. They are a phenomenal company. They have a high return on invested capital, and they have struggled a little bit in the AI space, but trust me, Google is going to be fine, and they are going to, at some point, initiate AI in a big way. They tried Bard, and Bard wasn't extremely successful, but I know Google is working on things behind the scenes. I know that it is only a matter of time before AI gets heavily initiated in the YouTube space and on Google itself. I mean, we already do see AI being used on Google. When you search something, you get there's the results with the little asterisk. That's all AI. And their AI is only going to get more powerful, and it's only going to have a greater impact in the future. I was buying Google between $80 and $100 a share, and it's one of my biggest holdings. I'm pretty happy with that investment. I'm pretty happy. They had a really big fall, and I took advantage of it. And now Google they're in the middle of a slight pullback right now, and I'm taking advantage of it again. I'm buying it between 150 and 160. I think that it is a steal. I think it's a great deal. It is an amazing company, one of the greatest companies in the world at a discounted price. Take advantage of it and hold it for the long term. All right, guys, that's all that I got. That's 5 stocks that you should buy now. These are 5 of my biggest holdings. Google's my biggest. Nike is my second biggest. Celsius is my third biggest. And then I have a good amount of money in Hims and PayPal as well. So these are my biggest holdings. They are the companies that I believe in the most. Like I said in the last video, the majority of my money is in index funds. That is the safest investment that you can make. Put the majority of your money into index funds and then slowly allocate it into individual stocks. These stocks are going to perform great over the long term, but you need to zoom out and have a long-term mindset. Don't get caught up in the day-to-day. Don't get caught up in these fluctuations, because this might look really bad, but here is what the market does. The market goes like this. It goes up and down and up and down and up and down. But over time, the market goes like this. It's a straight line. So you want to be buying when the market's up. You want to buy when it's down. You want to buy when it's up. You want to buy when it's down, because over time, it goes in a straight line. If you look at the charts, look at the chart of the stock market, of the S&P 500, of Nike, of Google, of any of these companies, right? You will see that over time, it looks like this. It looks like nearly a diagonal line over the graph. But in between that, if you really zoom in and look at its year-to-year moves, you will see years where it's down like this, and then years when it's up like this. So over time, the market goes up, the market prevails. Good companies make it out. Companies with high returns on invested capital and good management teams always prevail. And that's what each of these 5 companies has. So put your money into that. Well, this is not financial advice. Take everything with a grain of salt. I'm not a financial advisor, and this is not financial advice. This is for entertainment and educational purposes only. But Google, Celsius, Hims, PayPal, and Nike are 5 great investments that I'm making, and I believe that you should look into a little bit more too, because I think that they will be very lucrative investments. And if you, in 10 years, I believe that if you look back and you say, oh, I bought Hims at $28, I bought PayPal at $60, I bought Nike at $60, I bought Google at $150, and I bought Celsius at $35, you will be looked at like a genius, because those companies will be a lot higher in the future. I'm not making any guarantees. This is purely based on my assumptions and the education that I've done independently. But these are companies that I believe are great, and I think that you should look deeper into them. Don't buy something because I buy it. Do your due diligence, do your research, make investments based on your own judgment, but look deeper into these companies, because I believe that they have a lot of potential. All right, peace, guys. Go make some money. Hold for the long term. Be a long-term investor. Be a value investor. Find great companies, buy them at good prices, and hold them and watch your money grow.